Folks, welcome back. And today is September 22nd, 2025. This is focus on index futures. And we'll be looking at the December contract for NASDAQ E-mini futures. When I'm in a little bit better of a state of mind, I just lost a member of my family. And if you're a pet lover, if you're a pet parent, you know what it's like losing some. So I'm kind of going through that, and I'm not quite really there. So we're just going to look at the NQ. I will be ringing in the ES as well. I'm going to have a little bit more capacity to spend focus on that in addition to just the NQ. Right on the left-hand side, we have the December contract Christmas NQ daily chart. And on the right-hand side, it's the 5-minute chart. As I mentioned, we worked off this volume imbalance and really had a nice run up here last week. Friday, we used the volume imbalance, as I mentioned in the recording for Friday. And I told you to have these quadrant levels on your chart. And the market opened below, and we're going to look at the opening range in the next slide here, but we opened lower than where we closed on Friday. We traded lower down into consequent encouragement, went just a little bit below it, and then rejected all of that and came out and exploded to all-time highs above 25,000. So now I want to counsel you to remember how I taught you last week, how it's very important to never really try to expect or pick the top in a market that's trading at all-time highs, because it can just keep going and you have no idea where it's going to go. Nobody does. Like, I don't know. Nobody else is going to know. So the only thing you can do is focus on taking continuous buy signals until they no longer work. That's the only strategy that's going to hold up over time when you're trading with a market that's continuously making all-time highs. But over here on the London session, London kill zone here between 1 o'clock and 5 a.m., we have a nice fair value gap here. It drops down into the consequent encroachment of that premium wick. So it's going to act as a discount array here. And notice it goes down in the lower half of it, but it doesn't spend much time there. It just goes below here, accumulates at the consequent encroachment level there, and now look what it's doing. It fails to touch it again and then rallies up. Shift in market structure, bullish fair value gap, now during the New York AM session. Now I'm saying that because it's basically 7 a.m. to 11 a.m. You can break that up into pre-market session or the AM session, regular trading hours at 9:30 to 11. Okay, I'm just encapsulating this just for brevity's sake. And we have a bullish fair value gap here. Trades into that perfectly, runs higher. We have essentially a measuring gap. So if you look at the low to that gap there, it's about halfway between there and there. So between here and here, that's in close proximity to where a halfway point would be. And then we have a fair value gap that stays open, rallies off of that. Bullish order block, change in state of delivery after a retracement. The body's respecting that, and then rallies higher, creating an amazing, in my opinion, run above the 25,000 mark. Now, if we look at this through the lens of a 1 minute, we can see that we had relatively equal lows here in Friday's session, and we're looking at regular trading hours now, not electronic trading hours. So this will showcase the difference between previous day's close and today's regular session opening at 9:30 Eastern time. So sell side liquidity here. The market opens below that. The opening range here, the first 30 minutes of trading, is encapsulated with this darker gray box, and I've graded that as well. So here's the lower quadrant, consequent quadrant, upper quadrant. The market opening here trades up to consequent quadrant, which is 70% likelihood it's going to do that when there's a gap lower. And then we trade right up to the quadrant, the upper quadrant rather, hits it perfectly to the tick, and then drops back down to the lower quadrant. The body's respected, but it also trades one more time into this relatively low liquidity pool. Tags that one more time, breakaway gap. Trades above short-term highs. We have a bullish fair value gap there and a minor sell-side liquidity pool after trading to last Friday's high, but not breaching it. Trades lower, swipes the minor sell side that would have been trailed on longs, trading into the bullish fair value gap there. Then we have another run higher, shift in market structure on the lower time frame here. Bullish fair value gap trades to adhere, and notice it doesn't even trade to consequent encouragement, but reverses its role in delivering lower prices now back in sync with going higher. Rips above last Friday's daily high, buy side liquidity pool, and then creates a retracement in here. We're going to look at when scrub the chart over a little bit, but notice this box in here. This is all going to be condensed and shortened in size as I move forward into the chart. Here's that area I was referring to. Now we get to see the entirety of the day at the time of the snapshot. Those are those highs for last Friday's daily high, buy side liquidity pool. Hits it, it drops down, which is a 5-minute bullish order block. So I showed you a 5-minute chart first. That's this order block there. So it's going to look different because you're looking at it through the lens of a 1-minute chart. So when you're annotating your charts, make sure you're keeping track of what PD array you're annotating on a higher time frame when you drop down a lower time frame, because this is going to be much more salient when you view it from that 5-minute chart again. Then we rally higher, and this keeps on pressing higher. Notice there's no lunchtime macro, no retracement back to here's 10 a.m. Find a low, here's that one, and then we have this one here to noon. Well, neither one of those were even traded to because we're blasting off. The market's becoming parabolic. So when it starts to do things like this, I'm not calling a top. It just means that we're probably near some kind of an intermediate term high forming. I don't believe it's there yet, but it's showing characteristics of it possibly, forming maybe this week. All right, folks. Thanks for your patience today. I know I said I was going to have one for you this morning, but just not feeling it right now. So I will talk to you tomorrow, Lord willing. Until I talk to you then, wish good luck and good trading.